Sweet. And away we go. Well, it's been an interesting morning so far. Let me cancel some of this stuff out. There we go. And bring this over. Sweet. All right, well, let's start off with the big news from this morning. I kind of stayed away from it, and I've been staying away from the last couple non-farm payroll numbers. Yes, the recording is on this morning, Daryl. I just started it. Will not make that mistake again. I have two trades on right now, one of them from yesterday on the dollar Swiss, and then one that I opened up right after non-farm payroll came out on dollar Swiss. I have my take profit point in at 0.9822. However, we're still looking for opportunities to go short on euro dollar. We're going to kind of keep an eye on euro dollar here today because it's broken through the 109 level and it's skirting there at the 109 level. So we could possibly take some opportunities to kind of double dip on this dollar strength because that's what we're seeing today. We're seeing a whole hell of a lot of dollar strength. For those of you who don't know, let me bring up Forex Factory here at the bottom. For those of you who don't know, non-farm payroll came out this morning. Expectation was a rise of, holy shnikes. I don't know what that was. Expectation was a rise of 240. Came out at a plus 295. So obviously the non-farm payroll number was a stellar number once again. There was a lot of pessimism surrounding non-farm payroll this time around. It's hard when you get into those January and February months, and this was obviously the February non-farm payroll number, because what we saw last year was we saw weather to have quite a bit of an effect on the non-farm payroll number. A very big effect on the non-farm payroll number. So January and February were kind of months to where it's hard to have a very clear view. If you were watching something like CNBC before the news came out, it was actually quite funny because it seems like this happened last time also. The Bureau of Labor Statistics, who releases this number, there was a delay in releasing the number, and quite frankly, the people on CNBC kind of looked like a bunch of idiots when it was coming out because they didn't know what the number was. And they scared me at first because they go to their experts and they say, I think somebody said a rise of 166, to where I almost immediately went in and closed out my long position on the dollar thinking the dollar Swiss was going to go down. But I didn't. I stayed there because they were giving out some misinformation. They were going by what the people were expecting. And that kind of gives you an idea of I've said it once and I've said it again, you got to kind of tame yourself from listening too much to experts, even myself. I don't believe there are experts in the market because everybody's a speculator. But anyway, the number came out at a positive 295, and there was a lot of pessimism around this number. There was low ends, people saying a rise of 150, a rise of 160, a high end of people thinking it would be a rise of 300. So I mean, when you get those kind of all around the board type of expectations, I generally, if I'm going to trade non-farm payroll, I'll usually trade it, a lot of times before the announcement, sometimes look for retracements after the announcement. With a little bit of the confusion, with a little 1 minute delay that we had in non-farm payroll, it actually presented some opportunity. We didn't trade it live again this month, and there was a reason for that. I didn't want to, I really had no specific view on it. I figured that if we could find some retracements in the market after non-farm payroll, depending on the number, it can give us a view of what to expect and what type of trades to put in from here as a class. One of the things that did happen, though, is that a lot like dollar yen had come down. When you look at kind of the 5 minute charts on a lot of these pairs, I'll tile these windows a little bit better. When you look at the 5 minute chart on dollar yen, it was actually quite interesting. In fact, you kind of have to look at the 1 minute chart because dollar yen came up, and then there was just a brief moment, 1 minute of confusion as to the numbers, and it came back down. And once I saw plus 295, I actually took a long position on dollar yen I put a 50 pip stop and a 50 pip limit thinking it was going to go up, and it did. It went up substantially. So I made some money on that this morning just because the confusion, when there's confusion in the market, and this is not something that's systematic, folks. It's not something that you can just say, well, systematically buy something. It's just, you have to have a little bit of confidence to put in a trade like that, because once again, you're seeing the market be confused over a number, and when you see the number flash up, you just kind of got to be quick on the trigger. Not all the time are you going to take advantage of opportunities, but a little bit of the confusion caused by this number did present some opportunities for us here today. So dollar yen was one that it came down almost to pre-release levels down into here and then shot straight back up. Dollar Swiss did much the same. It came up and then came right back down to where the pre-release levels were. So that's why I took this second position here. I'm already long dollar Swiss from yesterday. I'm up about 80 pips, and I'm looking for 98.22 was my take profit point. And this little trade down in here for one lot, this is another trade that I had on to where I was looking at dollar Swiss for a shorter term trade of roughly 40 pips or so. It's nearing the take profit, so I'm going to keep a close eye on that. I really don't expect the dollar to really ease off that much today. I mean, these payroll numbers, what the payroll numbers really mean to us, folks, is the fact that it just makes it that much more likely that a Fed hike is imminent. You may not get that type of analysis. You get both sides of that type of analysis when you watch shows like CNBC or Bloomberg or your local financial network. Generally, once the number is released, I like to turn it on mute. Mainly because of people like Rick Santelli, who gets pissed off and has his own like little opinions. It's kind of funny to listen to the guy because he gets mad at people like, oh, I would bet you my house that they're not going to raise rates in March or in June, and it's just kind of funny listening to the dude. He gets so angry at the market. It's like, hey, calm down, Santelli. The market does not behave the way you want it to all the time. So I'm looking for a take profit on this for right now, and there I just reached my full take profit point on that. I'm sorry, I'm looking at trades that I was already in, but if you were in class yesterday, you knew that keep an eye on this euro dollar up in here, because now that the euro dollar has broken through the 109 level, here I'm going to put this up here. Put it right above the euro dollar, because if we see this 5-minute total on the euro dollar go to a -20, we're going to take a shot at this. Euro dollar came down. I have it here on the 5-minute chart. Came back up, and it's been consolidating here sideways. You see the dollar Swiss rising, breaking through that 9,800 level. You see euro dollar sitting here in this consolidation. I think that it's finding some support. It's trying not to break below the 109 level. However, if we do see the 5-minute total go to a -20, I think we have a situation where we can look to scalp that for a nice little short-term trade. The dollar trade we had yesterday, we were looking at some trades from yesterday, specifically on dollar Swiss. And here, I'm just going to pull this over here. In fact, let me kind of rearrange my charts a little bit. Actually, I didn't mean to take down dollar CAD. Actually, I wanted that one up. I want euro dollar up. Let me tile these windows. There we go. Just to keep 4 charts up for now, because we'll keep an eye on this. 5-minute totals go to -20. We're gonna give the euro dollar another shot. This dollar strength is, like I said, I don't think it's going to let up anytime soon. Let me show you this trade on dollar Swiss first here, though, and just keep your eye up here also while we're going through some of this. Dollar Swiss just has not been retracing that far down as it's come down, and what we were looking for yesterday is we saw this resistance level right in here at the 9,700 level. We were looking for a break above the 9,700 level on a 1-hour close. So we had this as our buy signal. Our stop placed right below this low down in here. I got in a little bit late. I got in at this level right up in here. It came down a bit and then shot up. Yesterday, the only thing I really said about non-farm payroll is that yesterday, as I said, if you're long the dollar going into non-farm payroll, I would have no problems keeping the position open. What I did was I had a little bit of money in this trade. I had about 50, about actually 30 or 40 pips in this trade at this point. I just moved my stop basically. I moved it from down here. I moved it right below this swing low right before the non-farm payroll number. And obviously it worked out pretty well because I had my limit right up here above the 9,800 level, thinking that it could make another run above 98. It's kind of a purely speculative play, but it worked out well. More of a discretionary trade, if you will. But the Swiss, the Euro, when we look at our total view numbers in here on the 24-hour time frames, the Euro has been extremely weak. The dollar's been extremely strong. It's been actually kind of driving the market. The Swiss has actually been pretty strong over the last 24 hours also, but the dollar strength has really been kind of trumping that. That's why I've been kind of paying attention to what the dollar does today, because we can, I think that this dollar strength can continue, and I think we're going to start seeing the Swiss come back down into form. A lot of this Swiss strength was caused on this little dip right in here, and you're going to start seeing this Swiss turn towards the bottom here as we go along. You can see we're only about 170 pips from parity on the dollar Swiss, and if you recall, back after the big drop, the unfixing of the exchange rate, one of the things I said is I expected the Swiss probably sooner rather than later to get back up close to parity with the dollar of 1 Swiss per dollar. So that seems to be working out in our favor. Remember, if we're trading these things aggressively, to look for retracements as these come down. For today, we'll meet up again on Monday, obviously, to look at some other trading opportunities. But for today, I've already made, you should have made money on the dollar Swiss if you took that breakout yesterday. Let it calm down. If we get any type of retracements back down, even retracements back down to these pre-release numbers, then I think we can give dollar Swiss another shot at buying it. That's why I have dollar Swiss right up in here. It's breaking through 9,800 right now, so that's going to be an interesting one to watch out for. Euro dollar, again, keep an eye on this one. We have this on the 5-minute totals. We can see it's starting to break down a bit. So we'll see if we can get a -20 on this, or if it starts breaking through this. We already have a -6 on the 1-hour totals. We know the euro is being sold. Watch out. I would preferably like to see this break below this low right in here before we go short. I think that would give us a good opportunity to go short on this euro dollar pair. If we do get a break below it, since we already have a really nice sell-in balance on the 1-hour totals, we might give it a shot. We might give it a shot to go ahead and sell euro dollar, but we're gonna keep an eye on this one. Other trades from, let me kind of go back. I don't know if any of you read the blog, but I had a nice little trade from yesterday that I posted on the forums or on the blog, and I'll pull that up real quick. In case none of you know what it is, you go to PitView.com. If you subscribe to it, whenever I post, it should post things on. Dollar CAD, obviously on Wednesday when it came to dollar Canadian, we were short. We made a nice little news trade from the Bank of Canada announcement. We made a nice little news trade on dollar CAD, good for about 50 pips to the downside, or to the upside for us, I should say. So we were able to take a nice little short position, but if you've been listening closely in class, one thing that I do like, dollar CAD is one of those currencies that I like trading in either direction. So I had a trade on here to where, since this was the trade we had from the other day where we were short and we made our 50 pips. It also came down in here, and I posted this. This was when I posted. This is where the dollar CAD was when I posted this trade. I put in a buy-in at the market because it came down to this 78.6 level. The dollar was looking extremely strong. So I took that opportunity to go ahead. Let's see where euro dollar's at. Dollar's starting to move a little bit. One moment. This is an extremely strong payroll number, and I'd hate to, you see it kind of skirting right in there. There we go. Let me actually just pull up the dollar CAD chart here, and I'll review this trade just to give us something to do while we're waiting. So here was the trade. We had a nice little 78.6% retracement. I actually liked going long at this 78.6 level, and if you look in here at the 78.6 level right down in here, not only did it hit off 78.6 and the dollar was showing a lot of strength in the market, but it also made this little double bottom formation to where it gave you a couple different opportunities to get into this. Double bottom formed. It broke through the double bottom formation. I had one profit point. I had actually entered, here was my entry right down in here. And I actually entered at this level right down in here and put my stop. I actually had my stop below the 100% retracement level, which was right down in here. And from there, I was looking for a one-to-one risk reward, which I was able to take off the table. A little late to the game, but I took one-to-one risk reward off the table. And I had a second profit point at 2,500, which was right around the 78.6% retracement of this move. So we're able to capture a nice little 70. I think it was about, in total, I think it came out to, let's see, 40 and then got an extra 20. So a nice little 100 pip move on dollar Canadian. It always trips me out whenever I get questions from students when it comes to the ways that we trade, because some people will email me and say, well, I don't participate in the classes because you don't, I'm a scalper. I oftentimes don't see the point in that, because in my opinion, trading is about making money. And just because you adhere to some type of time frame, I think if you ignore other time frames, it could be detrimental to your trading. If you've traded with me for a while, you know we do short term, long term, medium term. We don't stick to any one time frame. We trade based on what the market dictates to us. Anyway, I'm going to get off my soapbox. So that was a good trade on dollar Canadian. Hopefully you were able to see that post in the blog when it got posted. You can subscribe to my blog on there for whenever I post trades outside of class time, just by going here to subscribe to Steve's blog. All right, so let's take a look at what's happening with the euro dollar, because this is getting to a point where I think it's getting to a point where we should start thinking about pulling the trigger. I'm not going to give up a huge amount of pips today because I've made quite a good little couple of trades here this morning, so I would hate to give anything back. We're already at a -7 on the 1 hour totals. Let me just see if we can get, watching those 5 minute totals can confirm it over the short term also, but it's breaking down below those levels. You know, when you look at this is a nice sell imbalance here, and it's breaking through this little low, this consolidation. You can see that the other pairs are moving. Dollar CAD is moving up, dollar Swiss is moving up, dollar yen is moving up into new highs. I think based on just that 1 hour total, let's give it a couple minutes here. I think that's good enough for us. It's breaking through that low. I'm going to go ahead and short. I'm just going to do one lot on here because this is not necessarily a scalp trade. I'm going to go ahead and sell I think that now that this is broken through this 108 level, that it could conceivably make a run to the upside. I'm going to go for one lot on here, and what I'm going to do, and we may be able to make it with the volatility in the dollar, we might be able to make it. I'm going to put my stop. I know it's going to sound weird. I'm going to put my stop right up above this high. So I'm going to put my stop at, let's see here. I'm going to put it at 109. I'm going to put my stop at 109. $0.82. I'm going to put a take profit. I'm just going to, we could see some huge volatility in here today. So I'm going to put my stop. I know this is a large stop order, but remember the the market is moving substantially today. We're seeing 100 pip moves today. We're seeing 50 pip moves within an instant on a lot of these pairs. And let's see if we can't get a sustained break. The next support level really down on the euro dollar is in the high 107s. And if it's going to make a move to the downside of that 108 level, it's going to do it based on this dollar strength. In fact, we could probably just put this in as a, I'll give 50 pips back. I mean, that's not a problem for me. I'm not getting greedy here. I'm just trying to put my stop at a nice level. Let's see here. I'll put it at 108, 102 because or 109, 102. I'm basing this on that 1 hour total being a -7. This is almost like a swing trade. Coming back up and retesting those lows. I'm doing it based almost solely off this 1 hour total being at a -7. It's coming back up against us a little bit, but I think we'll take a shot on this. And we'll keep an eye on the 5-minute totals. If it starts coming up dramatically and we see the 5-minute totals go to, say, like a +20, we might go ahead and close this out. But let's just keep an eye on this one for now. We'll see if we can't get another. We'll see if we can't get another little drive of dollar strength on this, because that is certainly what's ruling the market right now. Days like today, on these I mean, look at this dollar CAD. It's up about 200 pips. Dollar Swiss is also kind of sticking there right above the 28 level, or no, I'm sorry, the 98 level. And even if this comes back up and stops us out, that would mean that we're going to look for also dollar retracement opportunities today. And I know that's a large stop order to put in, but I've actually been doing quite well over the last 24 hours. So we made that nice little 80 pip gainer on dollar Swiss, and then we made the nice little, almost 100 pip gainer on dollar CAD. So this is not me being too greedy, if you will. But some of these dollar moves, you would have to expect that at some point the dollar, I mean, there's no reason for it to kind of let up unless you just see a huge sell-off in the dollar of people taking profits, which is always a possibility because nothing is ever 100%. So we'll keep an eye on euro dollar. The only thing that what we'll do is the only thing that will take us out of this trade is if 5-minute totals go to +20, we might go ahead and close this position out and look for it to come back to -20 again and try to take another shot to the downside. Crazy day, crazy day. Bearish Gartley on dollar CAD. We do have a bearish Gartley here forming on dollar Canadian. When you take out this, good call on that. That's another thing that I was looking at. You see we have kind of this little A. We do have a B. We have a little C correction coming up. We do like trading dollar CAD in either direction, but the thing is fundamentals are really driving the market today of the strength that we're seeing. This is one to where we don't really have a perfect Gartley in here because the B needs to retrace between 78.6 or 38.2 and 88.6 of A. I mean, and that's pretty darn close right in there. So, I mean, you can call it a Gartley pattern. It's very close to being one. Either way, we have a nice little ABC that's come up here to the 78.6 level. That could be something that we look at for a swing trading opportunity also if we can get a reversal on dollar Canadian. Good call on that, Phil. Or Daryl? Or was it Phil? It was Phil. Okay. Let's see here. All right. Take that down. Still watching euro dollar over in here. Break through that 109 level. I don't think we're done with these dollar moves in here. Market's just opened. We could revisit this dollar Canadian position here in just a little bit. I think we have time on that. Here I can pull up dollar Canadian up in here. You see the 1 hour totals are showing a nice little buy and balance on there. So if we do see the 1 hour totals go to like a -5, if we do see the dollar start to sell off, this dollar Canadian can actually give us a nice little it can give us a nice little sell trade. Our short-term scenarios from the other week, we were looking at, remember, this was when the euro dollar was still up at the 110 levels. Selling the euro dollar on -20s and buying the dollar Swiss on +20s, if you were doing short-term trades the other day, would have worked out tremendously well for you. Remember, the euro dollar, we love selling the crap out of it when it retraces, and we love selling it when it shows any type of momentum. So euro dollar has been working out quite well for us as of late. I'm a little distracted here this morning because this is probably one of the more, this is kind of the Friday. Fridays generally can be very quiet unless it's a non-farm payroll day. If you knew what the amount of pessimism surrounding the non-farm payroll, I thought was pretty substantial when it came to like the different banks and everything. This type of fundamental shock to the market where we see that the dollar, the dollar still has, you see how the Swiss is coming down now, folks, on the 24 hours. It's starting to come down near the bottom. We see the euro is still in sell mode. The euro has been the dog of the market. It's been sitting there at the bottom of our 24-hour totals all week, essentially. So there's a lot of the euro is still being well offered, and the dollar is still being well bid against pretty much everything over the last 24 hours. There's some other trading scenarios that we can discuss here, and one of which is being this dollar CAD. After everything kind of calms down with this dollar strength we're having this morning, dollar CAD is one that we do like selling in either direction, trading in either direction. It's right at that 9,600 level right now. So that is one for a potential swing trade opportunity that we can copy down for today's trading notes. The other things that we can look out for here, I don't know if we've discussed this as a class or not, but on the euro dollar and dollar Swiss, we should probably set up our retracement trades once again. Let's start here with dollar Swiss. In fact, let's break these down so we're only looking at 3 charts, so we can kind of look at 3 charts in a row here. Let's break our charts down a little bit. Let me change this one over here. I'll pull dollar CAD over to here because these are the 3 we're going to kind of focus in on today. Was that Aussie CAD? I'm sorry. I meant to pull up dollar CAD. Where's dollar loonie at? There we go. One thing that we've been doing quite a bit of in class is looking at trading retracements, very aggressive on these currencies. Looking at dollar Swiss here, let me pull this up real quick. Our new retracements should be starting at this low to this high. You can see the big move that we've had in here. And for those that don't know, if we're watching the market and we see these retracements as they're forming, you know, we can watch and look at something like PitView and wait for any type of retracement to occur before we get in, and you know, wait for our 1-hour totals and 5-minute totals to come to fruition and give us a nice little +5 to confirm a buy trade. But one thing that we've been doing as of late when it comes to especially things like dollar Swiss and euro dollar is because we know that when they retrace, they don't retrace that far, and that 78.6 level has actually been playing very well in the market as of late. We have a couple of different options, one of them of which is on the 78.6 levels. There's been times when I've gone to sleep at night and overnight you'll see something come down, hit the 78.6 level, and then make a dramatic move off of those levels. So what we've started doing is, you know, if we're going to be away from our computer, if we're not watching PitView, if we're not watching anything, in order to cover ourselves, and this is highly aggressive because we don't really care what type of pattern it makes, but if it does come down and retrace, we know that we want to get into these moves as they occur, is putting buy limits at those 78.6 levels to ensure that once these things do come down, that we're getting in at those retracements. So a way to do that is a buy limit is there's 2 ways now that you can look at trading things like dollar Swiss and euro dollar. One of which is putting a buy limit in if it does come down and retrace, and you're going to be away from your computer to ensure that if it touches this 78.6 level, you're going to get in. That has given us some really nice trade scenarios over the last several weeks. In this case, you just put your stop below the 100% retracement, which would be 0.97302. Put your limit 1 at a 1-to-1 risk reward. Limit 2 what we do is we kind of go from the high to the 78.6 level, so that would be 0.98184. So what would that look like if you're putting it in? Well, the other thing that we want to look for, if you're watching the market, use +5 1-hour totals or +20 5-minute totals. You can use those to confirm the trade if you're watching the market. But if you're not watching the market, I think it's okay to protect yourself by putting in these buy limits. So buying into retracements is something that we certainly like to do on dollar Swiss and also on euro dollar. And that's being extremely aggressive because we're not waiting for any type of confirmation. So we'll put that on our trading list for today. You know, you gotta think that when you're looking at the market, when you look at just our trading in general for the last several weeks, and when you think of the way we trade as a class, we're not real. I've never been a flashy trader. I don't use a lot of technical indicators. I'm what most people call a naked trader. In fact, I always joke around, I'm actually naked right now. The beautiful thing about webinars. But anyway, we've done very well. We've been doing we've had a great January, a great February. And yeah, I think if we just stick with our strategies and we stick with just staying, on an even keel with the market, of trying not to give a whole lot back, that we can continue seeing, by trading our view and trading our view on like the dollar and using things like PitView to confirm our trades. I don't see a large stop to the success that we've had. Knock on wood, and not to piss off the trading gods, but it's been a very nice several weeks of trading, and it doesn't last forever. But whenever you have the market that is just the trend is your friend until the end, that's reacting in the way it is, where you have such clear-cut views of the market. The euro's crap, sell it. The Swiss, sell it. The dollar, buy it. When you have those type of clear-cut views, it's almost like late 90s type of stock market trading. Only instead of .com, it's euro, sell, Swiss, sell it, dollar, buy it. And it's just one of those things to where you want these types of market conditions to last forever, even though it's not going to happen, because the thing about the forex market is it's just like the weather here in Indiana. If you don't like the weather in Indiana, just wait 5 minutes; it will change. If you don't like the way the forex is trading, just wait a couple months; it'll change. NFP, we'll put that in at plus 295. Plus 240K expectation. Dollar strong. There you go. And the euro dollar, the same thing. The euro dollar, I'm going to switch back over to a 1 hour chart. But the euro dollar, you want to be able to trade this extremely aggressive also. If it does, there's always a chance that you can get stopped out on these things whenever you put in a trade. But, if you go up here, it's hard to find the swing moves on the euro dollar. But the other area on euro dollar that you would want to trade extremely aggressive, and here, let me take off some of these other objects from the chart. Let me delete this and this. We're already short. Euro dollar, same thing. Let me zoom in a little bit on this. Trading retracements is what it's all about. This 100% retracement, I'm kind of looking at this last swing move here to the downside. If we get anywhere near these highs right up in here, this is right below 110. This is another good spot to put in, something like a sell limit on euro dollar. If you're not going to be watching the market, if the dollar comes back and sells off and there's a huge amount of profit taking, this would be another nice spot, right here as a sell limit. If you're watching the market, you don't have to be as aggressive. You can watch PitView, wait for it to confirm the trade for you, but you can put a sell limit at 1.09893. The stop, you can almost put You can start it actually from right up in here. It's not going to make a huge amount of difference on our stop. We'll change our sell limit to 1.09947. Then we can put our stop right up above this high, which is 1.10345. And again, look for a limit. You know, limit 1 would be 1-to-1 risk reward. And this would just go along with our whole theory of selling the crap out of the euro dollar whenever it shows any signs of retracing. Momentum, we just traded a momentum trade on euro dollar. When the euro dollar and dollar Swiss, when they've been breaking these key levels, 110, 109, 108, when we've been seeing sustained breaks below these levels, you see here how we had that 1 hour close here that closed below the 109 level. This is what really took me in, you know, where I wanted to see why I felt comfortable taking that trade this morning. The trade this morning is not necessarily a short-term trade, folks, although I do think with the dollar strength we have legs for this to go down. But, you know, it's also more of a, you know, a swing trade also. We just have a tighter stop instead of putting it 110 pips away or whatever it would be. Limit 2. Whoops. Let's see, limit 2 would be, we'll call it 108,910. Somebody asked, how do you put this trade in? Well, if you're putting a trade like this in, what you do is you go under trading. In fact, I already have I'll show you how to put it in. You go under trading. I'll go to new order. You would put it in as a pending order, as a sell limit order. In this case, I could probably afford to do 2 lots. Put your entry in at 1.0. Your entry price for your sell limit, 1.09947. Put your stop at 1.10345. Your initial take profit should be your max take profit level. And then when you go into your terminal, you can see that you have your pending order right down in here. I already had one from yesterday, looking to trade that aggressive, but now I'll just kind of move that trade to make sure that I have some type of trade in here that would take advantage of any type of euro dollar retracement. And remember, you can always, if you're watching the market, you can always cancel that order. And if you're going to step away, you know, you can put it back in. But that'll solve that problem that a lot of us have of not getting in, you know, of missing some of these retracements as they occur. This is not a way that we're going to trade permanently, because we're just letting the market, the way that the euro has been aggressively sold and the way that the dollar has been aggressively bought against a lot of these pairs, all we're doing really is just making sure that we're taking advantage of that aggressiveness. The market's not going to be this way forever, but you know, when it is this way, you want to just be able to take advantage. So and the same thing here. If you're watching the market, use PitView to confirm. If you remember, PitView is probably the ultimate confirmation for trades. because it's showing you when the market makers are coming in and changing their stance and doing their buy and sell imbalances. So it's another thing to look out for. Keep that on there. Dollar CAD, I'm glad that's a great call on that, Phil, because this is one to where if we're going against the dollar strength, this is a good one to look out for, because dollar Canadian, this would be kind of a longer term little pattern right in here. In fact, we can pull it up on the, I don't know if we'll see it happen today, but on dollar Canadian, we've had tremendous amounts of success trading dollar CAD to either side. And this does fit in within a Gartley parameter right in here, because I mean, I believe that is, I don't think that's the 88.6, but if you look at that, that's almost a textbook Gartley formation. Good call on that one, Phil. As Yoda would say, the Padawan has become the master. I didn't even see that because I was looking at some of the other dollar pairs. The student has become the teacher. You have infinite power. This does give us an opportunity here, though. The thing is that you want to let the dollar strength subside a little bit. So this is one where you'd certainly want to use probably the 1 hour totals on dollar Canadian. You want to see it start to be sold. So on this bearish Gartley, I'll go ahead and put this one in our trading notes. I don't know if it would hit today, but it's certainly something that can hit at some point, and it's right at that 126 level. So we're going to be a little bit, we're usually very aggressive trading Gartley patterns, but we're going to use a little bit more confirmation on this one because of the dollar strength that we're seeing here today. So in this case, the sell entry, we're already getting technically a sell entry on dollar CAD, but we want to let this dollar strength subside a bit. So for the sell entry, I'm going to put a -5 on the 1 hour totals as our entry. The stop would be placed right above this high, 1.266. Stop would be 1.26653. If you can do Gartley patterns, if you can do 2 lots, limit 1 would be a 1-to-1 risk reward. And then limit 2, we always look for that larger swing to the downside, 1.24325. And then guess what? And then if it comes back down, we'll look to sell the crap. We'll look to buy it again when it comes back down. But that, good call on that, Phil. Proud of you, buddy. Proud that you're able to see those things now. And yes, this is certainly one that we do like trading in either direction. Euro dollar, we don't like trading in either direction. We like selling the crap out of it. But this is certainly one that we do like our opportunities to sell. Phil says, I will feel bad if it doesn't work. Buddy, never feel bad when a trade doesn't work. When a trade doesn't work, it does exactly what it should do. It loses. When a trade wins, it does exactly what it should do. It wins. Remember my thought process on the market. There are some days when you look like a total and look and feel like a total absolute genius, and there's some days where you feel like you're totally full of shit and don't know anything. And the truth is always somewhere in the middle. The truth is that you're a trader and you're not going to win 100% of the time, and we are more than willing to accept that. So you don't ever feel bad about anything when those occur. So bearish Gartley on dollar CAD. You can call it 1 hour, 4 hour. This is certainly going to be more of a swing trading scenario. We'll put that on there. Since it's Friday, I don't want to give you too many scenarios here. I think, sticking with dollar, I don't want to, we're going to take off some of these others. That we have on here. We have a bunch of trades down here at the bottom. So bearish Gartley, retracements, and then we have our open order as a class. And Phil, on that subject matter, by the way, buddy, how do you think I feel? I had one I had one student that came into one of these live trading classes, just one, and it just happened to be that non-farm payroll class where I was wrong. And the day before, we hit for like 50 pips on the European Central Bank announcement. This was several months ago, by the way. So he comes into he actually came into the live trading for the non-farm payroll. The next day, we went ahead and bought like dollar yen going into the non-farm payroll, and we got whipsawed. We lost like 50 pips, and I never told you this, but I got like a scathing email from the guy, like I lost money, so I won't be coming back. It's like, man, if you judge a trader off of one trade, then you should not be trading any type of market whatsoever. I get that all the time, man. Well, I came into class yesterday and you were wrong. It's like, yeah, I'm wrong a lot, dude. Sometimes you get the elevator, sometimes you get the shaft. That's just the way it works, man. If you can't handle that, you are in the wrong business. I make a freaking living off of being wrong. How's that? Great thing about teaching trading is that you're just like a weatherman. You can be wrong more than you're right. People still consider you to be pretty good at your job, even though you're only right like 50% of the time. It's like it's like being a weatherman. I'm sorry, I'm soapboxing here a little bit. Where are we at on euro dollar? Down like 3 pips. Still trying to break through those levels on here on the 5-minute chart. Still kind of consolidating and coming down. I actually still like this, as far as a trading scenario for today. Keep an eye on the 5-minute totals. If you get a little gun shy today, what you can do is you can, if it goes to plus 20 and you're a little gun shy about risking 50 pips on this trade, then you can go ahead and close this position out. And then if it comes, but remember, if it does come back and retrace, we have you can see our retracement zones on here. If it even comes back and retraces intraday back to these pre-release levels, which I highly doubt it does, its numbers are just way too strong. But just in case we do get some, programmed profit taking on the dollar, then, feel free to just take this off the table. But look to sell it again. If we do break through this high right in here and we get stopped out, and you see it go negative 20 again, and you see that it gives you an opportunity. Here, let me take off this longer term. And you see that it gives you an opportunity. If it comes up, you close out your position and it starts to retrace back against where the news was, then I would say take advantage of that. If it goes negative 20 again, go ahead and sell it. Go for and you can go for a smaller amount of pips as far as your risk goes. But we'll keep that one on euro dollar. Again, another good week of trading. Knock on wood. I hope it continues. Not to use hopium in my trading, but I hope it does continue. That's really all I got today. I mean, this is pretty standard here on the euro dollar. We're in at the market. We're down like a pip right now. If you want to, if you want to go for a smaller amount of risk or reward, I can give you some scenarios. I'm going to keep mine as is, but if you want to go for, if you want to risk a little bit less, you can put your stop maybe right above this high if you want. This high right in here is 1.08833, and maybe look for just a quick little 30 pips on this. I'll see how it goes throughout the day. If it gets to like noon and it's still maybe hovering down here and it's just going sideways at these lows, and you just don't want to sit here and watch the market anymore, then, close it out. That may be what I do also. Phil asks, can you repeat your message about your blogs of where you show your trades? Yeah, sure. Let me, there's a couple different blog spots that you can go to where I post. PitView.com. You can always find my blog on PitView.com right down here. If you just click on the actual message, it'll take you to my blog, and you can subscribe to it right down in here. Here, I'll actually post it for you guys in the chat. There we go. There's a couple different of other places you can go. If you go to NuriFX.com, this site is still under construction, but you can see NuriFX.com. If you go to the bottom, I also update down in here. So if you go to NuriFX, that is another place where you can find it. I also, whenever I post the blogs, I also post them to Facebook at facebook.com/NuriFX, and I'm also on Twitter at NuriFX. Oh, and I forgot, I also send out the blog via carrier pigeon. Carrier pigeon named Frank. I'm just kidding. Sorry. My humor is just a little out of control right now. Is the same information. Generally, it's most of the time when I blog, I post it to PitView, I post it to my blog, I post it to Facebook, just so people have many different ways of getting it. Do you need passwords? No. Not for the blog. So no, you don't need passwords for the blog. At some point you might have to, because I do put my trades out there. I might go from, trading scenarios, trades that I'm placing may have to be password protected, and then any type of like regular news I put on there, I don't know. I'm not a communist, so I do like actually making some money from what I do. So that may come down at some point. Let's see here. Just still watching this. This is still up about 1 pip. Where are we at on time? Oh, I'm sorry. I'm way past time. Yeah, I didn't mean to keep you on here longer here, folks. But yeah, I'm sticking with this trade on euro dollar. Again, let me just kind of review the scenarios. If it goes plus 20, then yeah, maybe we should close it out, take whatever profits we have off the table. I'm keeping mine as is. I'm risking 50 to make 50. I think that we can probably make a run to the downside and test out these lows at 108. The real support level is actually at like the 107 levels. So I think today with the dollar strength that we've seen, we can make a play on that. Dollar Canadian, if that goes to a -5 on that Gartley pattern, Phil, I will get into that. I will take your trade idea. Your trade idea has become my trade idea. And other than that, if I see any type of retracement, those two retracement scenarios on both dollar Swiss and euro dollar, I will have both of those in to get in if the market does retrace. The 3-candle stop, if you're scalping, that's another scenario that you can do. The 3-candle stop, what it does is, let's say if you're if I'm short euro dollar in here, the 3-bar reversal or 3-candle reversal is where you count back to the previous 3 candles. 1, 2, 3. Like if we're short on a 5-minute chart and we want to get out if it reverses at any point, we would count 1, 2, 3, and what we would do is we'd put our stop at the high of those 3 candles. So it would be up in here, like 1 pip above that high. Excuse me. And if you're looking at it on a 5-minute chart, if it's updating every 5 minutes, you would update it like the 1, 2, 3, and you would always move your stop to be at the high of the previous 3 candles. Now, if you get any what we call inside candles, you ignore those. Like this looks like an inside candle, but it's actually not. This right here, this is an inside candle. You see how this candle, this little doji right in here, do you see how it didn't break the high or the low of the candle previous to it? This would be considered an inside candle. So you would never count that. This is barely, you have to see how it barely broke the low here. That's not an inside candle. But anytime you have an inside candle, it's not giving you any new information, so you would not have that in your count. So you'd go, right now it's 1, 2, 3, your stop would be above this high. So that's another alternative that you have on this. If you just want to keep a 3-bar reversal or 3-candle reversal going, you can keep your stop at the high of the previous 3 candles. That's another alternative you have. For right now, if you look at the account balance, it was at 317 yesterday, which basically means I'm up like 200-something pips over the last 24 hours. I don't mind surrendering to the trading gods 50 pips. I'm willing to take another shot, and if I give 50 pips back, it's still going to be a highly successful trading week for me. So I'm going to keep it as is for now and just keep an eye on those 5-minute totals. Yeah, the 3-bar reversal can be extremely successful, especially when you're doing multiple lot trading and you take the 1-to-1 risk reward off the table. And if you're doing it on like the 1-hour candles and you just keep on changing your stop on like the 1-hour candles if you're doing a swing trade and you got that second lot with the stop at break even, it's very successful in that regard also. So that's another way. The only problem is if you're trading on a 5-minute chart, you got to check it every 5 minutes. If you're trading off a 1-hour chart, you got to check it every hour to make sure that you keep your stop at that distance away. But for right now, I'll keep that as is, and just those trading scenarios here for today. Those will be my trades that I'm looking at today. But remember, I'm going to see you all on Monday morning, so this is not going to be a long goodbye. It's just going to be a weekend goodbye. And do let me know if you have any questions or comments, concerns, or issues. And I'm always available to you on email. You should all have my email, steve.neri@pitview.com. Anyways, that's it for me, folks. Have an outstanding weekend. I hope you all are doing very well. I hope you've all enjoyed a lot of the success that we've had. And I hope I'm in your good graces at this point. So I will chat at everybody on Monday morning. I'm going to go ahead and sign off here. Have a fantastic weekend. Bye-bye.